Top 5 mistakes beginners in the stock market make. That's what I'm going to be sharing with you guys here today. If you've been investing in the stock market for less than a year, or you have yet to get into the stock market and actually start building yourself wealth in the stock market, I'm going to give you 5 things here today that should hopefully help save you a ton of money, okay? I've been in a fortunate position where I'm on YouTube and I see a ton of people coming in the stock market, a ton of new people. And when I get to see all these new people come in the stock market, I get to see some of the same mistakes repeated again and again. So if you're watching this video today and you're newer to the stock market, avoid these 5 mistakes because they're just the 5 traps that so many new investors in the stock market get stuck into, and they end up losing money because they get in these mistakes, and they end up not making nearly as much money as they could have if they would have avoided these mistakes. So I hope you guys really enjoy this video here today. Hope you get a ton of value out of it. Make sure you guys smash that thumbs up button here today. That lets me know that you guys enjoy me giving this value out. And without further ado, let's get into this. Mistake number 1 I see so many new investors get trapped into in the stock market is they start buying stocks without even fully researching those stocks. If you want to pick individual stocks, you want to let me put my money in some Apple stock, or let me put my money in some Facebook stock, or whatever stock you're trying to buy, okay? You need to fully research that company before you ever stick a dime in it, okay? And this goes for any investment, not just stock market investments. Too many people end up buying into something without researching it. And it's like, if you want to buy into a stock, make sure you guys are researching it. What do you need to research? You need to read the 10K. This is on the investor relations page of a company's website, okay? You can simply find that by just Googling whatever company you're looking into. Let's say you want to look into Apple stock. You type in Apple investor relations. Let's say you wanted to look at Facebook stock. You type in Facebook investor relations. It'll be the first thing that pops up in Google. Go on there, read the 10K, read the 10Q, listen to the latest conference call, do some Google News search around that stock, and do your research work on that stock so you fully understand what you're getting into. Read the risk factor section in that 10K. Read everything in the 10K, but definitely the risk factor section so you know the risks associated with that business. You know what could go wrong in investments. Now, whenever you're going into any investment, including stock market investments, very important to realize, okay, I have this potential upside and I can make a lot of money over here, but what could go wrong with that investment, okay? That's why it's an investment. There's always some sort of risk there inherent with it, and you just got to understand that going in, because if you don't fully research these stocks, you know what's going to happen. Stock price is going to go down in the short term. You're going to get scared out of the stock. You're probably going to sell at a really bad price, and you're going to end up losing money on that stock when you could have maybe, if you would have done your full research, not have gotten into that stock, and you would have realized it was overvalued. There wasn't as much exciting things going on. Or when that stock dipped, if you had fully done your research, maybe that was a great company and you should have been buying more shares as it went down rather than selling off shares at bad prices, okay? This is something that gets so many beginners in the stock market. It just destroys a ton of their wealth because they start buying these stocks without researching them. They're too worried about setting up their new Robinhood account or whatever, rather than let's do some research work on these stocks before we start putting our money in them, okay? That is mistake number 1. That will cost you a ton of money if you go ahead and start buying stocks without researching them first. Let's get into mistake number 2 that beginners in the stock market make. Mistake number 2 that I see so many beginners in the stock market make, and actually I see some people even making this mistake that have been in the stock market a while, okay? And it comes down to valuing others' opinion over their own opinion on a stock, okay? I don't care how much you respect somebody, how much you look up to somebody, you should always take your own opinion over theirs. It doesn't mean it's a bad thing to hear other people's opinion about your stock you're looking into, you're thinking about buying, maybe you already bought. But it's a whole other thing if you're just valuing, basically buying that stock or not buying that stock based upon what other people are saying out there, okay? Everybody's going to have an opinion. The guy on CNBC is going to have an opinion. The guy on Bloomberg is going to have an opinion. The guy writing articles on Seeking Alpha, he's going to have an opinion, okay? I'm going to have an opinion. Other YouTubers are going to have an opinion. Everybody's going to have an opinion about this stock, that stock, good, bad, it's the best stock ever, it's the worst stock ever, it's not that good of a stock, it's an okay stock. Everybody's going to have their opinion. But at the end of the day, you've got to have the confidence in yourself to go buy that stock, okay? You've got to have the confidence in the belief system in yourself. This is a game where you need confidence behind you. And as over time, you'll get more and more confident, or at least you should get more and more confident over time and as you make some money in stocks and things like that. But the fact is, if you're someone that has no confidence in your own picking decisions of stocks, you're probably going to lose some money in this game. And the reason being is you'll value other people's opinion and they're like, oh, this stock's great, I'm going to buy this stock, blah, blah, blah. Somebody needs to buy this stock. They mention something like that. You go buy that stock. It goes down the short term. You would lose money. You end up selling out of that stock at a bad price because you never even really believed in it anyways. You were just believing what they were saying. And that's not a good situation. If you're going to have the audacity to pick individual stocks out there, you need to have confidence in yourself that you can make good judgment decisions on if a stock is a good value when you buy in or not. And where is that business going to go over the next several years? Where's that business going over the next 3 years, 5 years? And I can tell you what, you're going to get a lot more confidence if you actually read those 10Ks. You actually read those annual reports. You listen to those conference calls. You know why? Because then you're going to get a really good understanding of what that business does and the likelihood they're going to succeed in the future. And you're going to be able to understand a business model almost like an executive would, because you're getting all the information that an executive would have. And so when it comes to getting confidence, a lot of it goes right back up here into number one, doing the research work. When you do that research work, it's much easier to have an opinion on a stock that is a strong one, that you say, I need to buy this stock because of XYZ reason. I need to sell this stock because of XYZ reason, not because the guy on CNBC said, oh, I don't like that stock, I'm not buying it, I would short sell that stock, and so you end up doing the same thing. That's just not a situation you want to be in. You got to have confidence in this game, okay? That is number two. Make sure you value your opinion more than anybody else's. I don't care how much you like him. I don't care if it's me, Warren Buffett, the guy on CNBC, the guy on Bloomberg. I don't care who it is. You need to value your opinion more than anybody else's, okay? Let's get into number three. Mistake number three that so many beginners in the stock market make, and if you're a beginner in the stock market, definitely a decent chance that you're already making this mistake, okay? Coming at number three is over trading. So many beginners in the stock market overtrade. What does this essentially mean? This essentially means that you're getting in and out of stocks way too often. You're taking short-term losses, short-term gains just way too often. The goal is, well, at least when you're going in, at least as far as my philosophy goes, the goal is you're trying to think out like 3 to 5 years as far as a business goes, okay? And it doesn't necessarily mean you'll hold that stock for the next 3 to 5 years, but at least that's the goal. And what I find a lot of times with newer investors in the market is though something will happen very short term. A stock will go up 10%, a stock will go down 10%, and they'll take a profit or a loss very short term, and they'll get kind of shaken out just because like, oh my gosh, I just invested in that stock 3 weeks ago and it's already up 10%. Holy smokes, I need to sell out of the stock right away. Or oh my gosh, I just invested in the stock and it went down 10%. Maybe this is a bad mistake. Maybe it's going to go down 25%. Maybe it's going to go down 50%. And they overtrade and they're getting in and out of stocks, in and out of stocks, in and out of stocks, taking tons of short-term gains and short-term losses and not realizing like a lot of times those gains could be much bigger than what they ever anticipated, and also not realizing that sometimes with some of these stocks, if you've done your full research work behind a stock and it goes down the short term and you believe in that stock a lot and you believe it's an undervalued company, a lot of times you should be buying more, not selling at really bad prices and whatnot. So this is just something I find way too often with beginners in the stock market, because a lot of times they don't have confidence yet in themselves, and a lot of times they aren't doing the real research work necessary on these stocks. So it leads to just a lot of over trading in and out of stocks, taking 5-10% gains and losses constantly, and treating the stock market like it's an in and out game rather than it's an investment game. I mean, I can understand if your stock goes up, 50% or 70% or some insane number in a very short amount of time, I can understand getting out of that stock. But when you're taking these little 5 to 10% gains and losses, more than likely you're over trading, okay? And you're probably not doing enough research work, all right? That's mistake number three beginners in the stock market make. Let's get into number four. Mistake number 4 I see beginners in the stock market make all the time. Oh, I love this one. I love this one because it's just so painful. It's just so painful to see, but it happens all the time, okay? Number 4 is short-term stock price moves. You know, the stock market's open like, 200 something days a year. Stock prices are going up, stock prices are going down, and you have all these short-term stock price moves, and it leads to people having two agendas. They say, oh, I'm a great investor. Oh, I suck at investing, just based upon whatever's going on in the short term with these stock price moves. And let me tell you, if you're trying to be an investor, a real investor, keep in mind there's a big difference between traders and investors. If you're a real player and you're trying to be an investor, you need to be judging how things go over the long term with these stocks, not based upon what happened today in the stock market with your stocks. Just because your stock went down today does not mean you suck at investing, okay? If your stock is down 3 years from now that you're buying today, then you probably made some mistakes there. You probably didn't do your full research, or you didn't have the right strategy or something. That's probably a mistake. But what happens this week, today, next month, it really is irrelevant in the short term if you're a real investor in these stocks. And far too many times I'm seeing from investors out there, or people that are trying to become investors, I'm seeing that they're judging themselves that they're a great investor or they suck at investing based upon just a bunch of short-term stock price moves. Guys, let me tell you, the stock market is a volatile place, okay? Every single day there's stocks moving up or down 2%, 3%, 4%, 5% on earnings days, sometimes 10, 15, 20+% in a day on some of the earnings days. And you have people out there judging themselves if they're good at investing or bad at investing based upon these short-term stock price moves. And I'm telling you guys, you can't judge it that way. Sometimes the stock market is going to be a very volatile place in a very negative way. And sometimes you just happen to get in the stock market when it's all going down. And I can tell you, that's the time I got in. That's actually the best time to get in the stock market. When I first started in the stock market in 2008, 2009, stock market was a really ugly place. It was a really volatile place. And a lot of people were kind of getting destroyed. And that's usually actually the best time. Even if you're going down on positions in the short term, on the backside, well, over time, you're going to probably make way more money because you were getting in when the stock market was going down rather than when the stock market was going up, okay? So don't fall into this trap of thinking you're a great investor or you suck at investing just based upon whatever is going on in the short term with these stock price moves, okay? That was number 4 mistake beginners in the stock market make. Let's get into the last one, number 5. Alrighty guys, before we get into this last one, number 5, leave me a comment down there if you've ever made any of these mistakes when you were first getting in the stock market, or maybe you're watching this and you're in your first year and you've made one of these mistakes. Leave a comment down there. Don't be embarrassed by it, okay? There's nothing to be embarrassed about. We all make mistakes in the stock market. I've made mistakes in the stock market. Warren Buffett's made mistakes in the stock market. Every investor you've ever known in your life, they've all made mistakes in the stock market. So I want to hear what mistake you guys have made over time in that comment section. Don't forget to smash the thumbs up button, okay? Last mistake here, number 5. The newer investors in the stock market getting trapped into buying penny stocks and just super highly speculative stocks that are cheap, okay? They see these penny stocks or whatever. Let me just tell you, 99.9% of penny stocks should be delisted from the stock market. They serve no purpose and there's really no underlying business in them with 99.9% of them, okay? So you don't belong anywhere near penny stocks. No one belongs anywhere near penny stocks, but they attract people because they're like, oh, I buy the stock for 2 pennies, and what if it goes up 2 pennies tomorrow? Then I all of a sudden double my money or something like that, guys. Don't be messing around with penny stocks, okay? And just super highly speculative stocks in general, those are not the type of stocks that you should be messing with as a beginner in the stock market. You should be looking at value stocks, dividend stocks, some of those safer business models that you can make some dividend income and things like that, okay? As a beginner in the stock market, that's where you should really be focused. Don't be focused on super highly speculative stocks. Don't be focused on penny stocks and things like that, guys. Focus yourself on the real players, the real stocks, the real companies to look into, okay? Because this ends up losing people so much money in the stock market when they first get involved. It's absolutely incredible, okay? So I hope you guys really enjoyed this video. Don't forget to smash that thumbs up button and hit that subscribe button if you have not already. Thank you for watching. Have a great day.